man of the moment, the chairman and managing director of Bank of Baroda, Mr. M.D. Mallya, joins us. Mr. Mallya, thanks much and congratulations on a very superlative performance as far as the net interest income and the non-interest income go. Can you take us through what was the reason for the net interest income going up? What were the advances growth? What was the margin picture? Likewise, if you can break the non-interest income as well. Mr. Mallya, can you hear me? All right. I think there's a problem with the connection, but we now have the provisioning figures as well of Bank of Baroda, and the provisions have halved actually. It's about 200, the provisions have halved to 200 crore, 209 crore from 424 crore year ago. So quite clearly that also has helped boost the profit in year-on-year terms. Likewise, other treasury income should have done well. This is a very good set of numbers that's come from Bank of Baroda. Noida toll bridge numbers coming in. Not a bad number. All right. Mr. Mallya, can you hear me now?
Yeah, I can hear you.
All right. If you can take us through the net interest income picture, how much did your advances grow in the quarter and how much did your margins improve?
See, as far as the net interest margins are concerned, we have been able to have a domestic NIM of about 3.21. And at global level, it is 2.91. If you look at, in fact, the domestic NIM of the last year, it was 3.06. So therefore, effectively, we have been able to improve the margins by about 15 basis points as far as domestic operations are concerned. Internationally, it has remained flat at 1.73, and therefore, globally, it has increased marginally from 2.90 to 2.91. I would say one of the main reasons for this is our continued efforts in improving the CASA, continued efforts in ensuring that bulk business is not done, and in fact lesser reliance as far as bulk deposits are concerned.
Oh,
so both in terms of cost of deposits and yield on advances, we have been able to manage well.
So can we get some numbers? What was your CASA and what is the low cost deposit now? Also, if you can take us through the detail, the breakup of the non-interest income. What was your treasury? What's your fee?
Yeah. See, as far as the CASA is concerned, we have grown almost by about 20% year on year. That is almost a CASA level of around 35.83% as of March 09. Of course, because of the accelerated growth of the overall deposit base, CASA has marginally come down by about 90 basis points. But the point which I would like to emphasize here is that the CASA numbers are not the terminal numbers alone. On an average basis, we have been able to grow by about 20-21% in CASA.
Right.
That has largely contributed as far as the moderation of the cost is concerned and improving the overall NIMs.
Right.
I think that's been a very strong positive.
Right.
Now, talking about the fee-based income again, our continued focus on the fee income, apart from the treasury income, has really given lots of benefits. In terms of numbers, I would say the fee income, net of treasury, has increased from 877 crores last year to 1,222 crores this year, which reflects a very robust growth of almost 39.3%.
And treasury numbers?
I would therefore say, yeah. Treasury numbers have increased from 811 crores to 1,273 crores. That's a growth by about 57%, which is itself quite very strong.
Right. Mr. Mallya, can you, sir, walk us through credit growth by category? If you have the numbers, credit growth in SME, agriculture, mortgages, other retail, large and mid corporates?
Yeah. As far as the overall advances are concerned, let me take the domestic first. Domestic credit has grown by about 29.3%. That is from 84,503 crores to 1,09,283 crores. By and large, the credit growth has been equitably distributed amongst the various components. For example, SME has grown by 24.2%. Agriculture has grown by 28.3%. Corporates have grown by about 31%. And retail has grown by a modest 16.3%. Obviously, retail, we were ensuring that we only take in good quality accounts, and therefore the overall growth has been around 16.5%. Herein, the housing has grown reasonably well, but other components of retail, like consumer personal loans, we have been consciously growing a little bit slower.
Right.
That is why overall numbers are around 16.3% increase in retail, but overall I would say housing, vehicle, education has grown by about 20-21%.
Mr. Mallya, sir, last quarter or last 2 quarters have been rather unusual in the sense that you became the lender of last resort. I mean, there was no money available from private equity or anybody else. It was just the banks. Do you believe growth in interest income at the rate, or credit growth at the rate that you've been seeing, is possible in the next quarter, which means can we continue to see this number as we go into, let's say, next quarter and the quarter after that?
Maybe credit growth can be slightly muted as we move along in the current year. Instead of the 29.3% growth which we have achieved in the current year, next year we could see the credit growth around 23-24%, which by itself is a reasonably good growth, I would say.
Okay, I have two questions for you. One, quantitative, sir. How much of assets did you restructure in terms of absolute numbers? If all that were counted as NPA, what would your total NPA be?
See, as far as the restructuring is concerned, we have done about 2,500 crores in the current year. But then I would also like to make a mention here is that all the restructured accounts are not bad accounts. In many of these accounts, maybe quarterly installments which have fallen in the third and fourth quarter have been slightly rephased to be repaid in the first and second quarter of the next year, which in itself is not a very bad thing to happen. Therefore, overall, I would say the quality of the restructured accounts continues to be reasonably strong and good, and I would not see these accounts falling into NPA in the due course of time.
Mr. Mallya, one final question. You said that you may be able to manage 23% advances growth, but at what level will capital become a constraint? Can you manage more growth, or would you hit a tier 1 constraint?
No, I don't think we have any constraints on capital. The capital adequacy as per Basel II as of March has been 14.05%, which itself is very strong. In that, the component of tier 1 is about 8.58, which again is quite very strong. Now, I have a headroom to raise capital, both at a tier 1 and tier 2, almost about 4,000 crores plus in tier 1, 8,000 crores plus in tier 2, and even assuming a credit growth of 25%, with the plowback of whatever the profits which we earn in the year, I think for the next 2 years, capital should not be a problem, even maintaining a capital adequacy ratio of as high as about 12.5 to 13%.
Okay, Mr. Mallya, thank you very much for joining us with all those details. So that's